Hi students, today we are going to discuss another comprehensive problem from admission of a partner. Here two partners are there, A and B. Their balance sheet and adjustments are given here as the question. You can pause this video and as usual you can write down this question in a piece of paper and can be kept with you while solving during the procedure of solving the question. So here two partners A and B, their balance sheet given, liabilities, assets, and in the liability side is given first item provision for doubtful debts. That provision for doubtful debts here instead of deducting from bad sundry debtors given on the liability side. Both are having the equal effect. Book value of sundry debtors given in the asset side and provision for doubtful debts as a provision it is given in the liability side. And workmen's compensation reserve also is there. And we have on the asset side loss also, accumulated loss. Then here it says that C was taken into partnership on 1st April 2019. C brought rupees 40,000 as his capital. But he is unable to bring his share of goodwill in cash. That means he is not bringing goodwill premium. And the new profit sharing ratio is given 3:2:1. So the profit sharing ratio of A and B is not given. That means we have to assume that they are sharing the profits and losses equally. That is what in the partnership agreement also, if it is not mentioned, it should be shared equally. Same way we are assuming here also. Let us see the adjustments. Claim on account of workmen's compensation rupees 3,000, write off bad debts amounting rupees 6,000. Now we have provision for bad debts 4,000. We have to create provision for bad debts up to 6,000. That means 2,000 increase is there. And workmen's compensation fund also we have claim 3,000. So remaining 2,600 can be written off among the partners. It can be shared among them. Then creditors are to be paid rupees 2,000 more. Creditors increased. Then unforeseen liability 2,000 rupees is to be provided for. That also increase in liability. Then outstanding expenses be brought down to rupees 1,200. And given goodwill is valued at 1.5 years purchase price of the average profit of last 3 years. We have to prepare journal entries, ledger accounts, capital accounts and opening balance sheet after the admission of C. Okay, first as usual you have to prepare the journal entries, but now what I am doing is solving from ledger account. After leaving the space for journal you can prepare the ledger account, but you have to leave the space for the journal first because after the journal entry only ledger account comes. But for understanding sake we are starting from ledger accounts from revaluation account onwards. So here is the revaluation account and particulars amount. Debit side we can write the first item. In the question it is given that provision for doubtful debts. Provision for doubtful debts we have in the liability side. Provision for doubtful debts 4,000. Now provision for doubtful debts became 6,000. So 2,000 increase in provision for doubtful debts. That's where we are going to write first. Liability increase, debit side of the revaluation account. Then next, write off bad debts. Creditors are to be paid rupees 2,000. Creditors are to be paid 2,000 more. That means creditors also increase. Another liability increase. We can write to creditors 2,000 more. Then comes unforeseen liabilities. There is an increase in unforeseen liabilities. A new liability came that we are writing here again 2,000. Then outstanding expenses should brought down. Outstanding expenses came down. That means outstanding expenses, a liability was there, that was decreased. Decrease in liability should be credited by outstanding expenses 4,800 is written. Then we have loss. We have to write the loss first. So all other entries are over. So we have to write the find out the loss and should be credited to their capital accounts. So we can write here capital accounts for sharing the loss for A. Total loss we have here 4,200. 4,200. So that we can find out the total amount here, that is shifted to credit side. Then got the loss here 4,200. For A it's half and for B the remaining half. Total 4,200. So that is the revaluation account. Is it clear? Then let us see, we have to prepare the capital accounts. For preparing the capital accounts, we should, in the capital account we have to show the treatment of goodwill brought in by C. So for that, in order to find out the goodwill or the sharing of goodwill, we should first calculate the sacrificing ratio that we are going to calculate here. Calculation of sacrificing ratio. Sacrificing ratio equation, old ratio minus new ratio. Then first partner A sacrifice older share, half share, that means 1/2 minus 3/6. So he has nothing, he is not sacrificing anything. Then for B, same way 1/2 minus 2/6, 1/6 is the sacrifice. So sacrificing share of B is 1/6. And we are going to calculate the adjustment of capital, adjustment of goodwill to be brought in by C. So C brought some goodwill, how it will be adjusted. Before that, we have to calculate or find out how much money C should bring. She has not brought the money in cash, but it should be adjusted in his current account. So for that, how much goodwill he has to bring, we will calculate. For that, average profit is given. So average profit is equal to 8,000 plus 10,000 plus 18,000 divided by 3 years profit. So average profit is equal to, we will get 12,000. Then goodwill is equal to average profit into number of years purchase price. Number of years purchase price, it is given here 1.5 year. This is 1.5 year. Then C's share of goodwill is equal to 18,000 goodwill we have got its gaining share. That means his share of profit 1/6. So that is 3,000. This 3,000 share of goodwill will be taken by whom? B, because B only sacrifices. That means C has to give the goodwill to B. Now this much is clear? Yes. Let us see the preparation of capital account. Capital account of A, B and C. So we are writing, filling the columns, particulars, amounts for A, B and C, both sides. Then let us first write the opening balance. Opening balance brought down we have written for A, B and C. That balance is there in their balance sheet that we are writing here. A and B, 50,000 and 60,000. Then workmen's compensation reserve sharing. Sharing of workmen's compensation reserve means we had workmen's compensation reserve 5,600. So out of that there is a claim 3,000. Remaining 2,600 will be shared among partners in their profit sharing ratio. So profit sharing ratio equal share. So workmen's compensation reserve 1,300 each is shared. Then next there is loss, accumulated loss is there, that we have to write in their profit in their old profit sharing ratio 4,000 shared equally. Then comes revaluation loss. that also 2,100 each. Okay. So now C is unable to bring the goodwill, so it will be credited to his, or it will be debited to his current account. It cannot be shown in his capital account. It will be debited to his current account. Why we cannot show it in his capital account? Because if we show this goodwill amount in C's capital account, his actual capital will be decreased. So that should not be there. So it should be separately shown in his current account. So C's current account, in B's column, we will write goodwill amount 3,000. And C brings capital. So by cash in C's column, he brought capital, will be written here cash. Okay. Now let us see the total and balance. This is the total of all the three partners that will be written in the debit side, and after that its balance can be written here. What it is called as to balance carried down, that is the closing capital balance of A, B and C. Okay. Now let us come back to the preparation of journal. In journal, we are writing here journal heading, journal entries, and written the filled the format. And first entry on April 1st 2019. So first of all we can write the revaluation entries. So we know that provision for doubtful debts increased. So for that, revaluation account debtor to provision for doubtful debts. Revaluation account debtor to provision for doubtful debts. That amount can be marked here 2,000. And let us see the narration. Being increase in the value of doubtful debts. Then next journal entry. Next in the same date, revaluation account to creditors, because creditors increased and there is a new liability of unexpected liability or unforeseen liability. So increase in the value of these two liabilities will be shown there. That is the narration, being increased in the value of liabilities. Then next we have to write the decrease in the value of a liability. Which liability decreases? Outstanding expenses decreases. So outstanding expenses account debtor to revaluation. Okay. How much? 1,800 each. 1,800. Being decrease in the value of outstanding expenses. So next journal entry on the same date. Revaluation, all the adjustments are over. Now we can write the journal entry for revaluation loss. Is shared among the partners equally? No. So A's capital debtor, B's capital debtor to revaluation. So that amount can be written 2,100 each, being sharing of revaluation loss in their old ratio. The next, see, accumulated loss was there, sharing of accumulated loss. What is the journal entry? It will be shared among the old partners. So A's capital debtor, B's capital debtor to profit and loss account. A's capital debtor, B's capital debtor to profit and loss account. Being sharing of accumulated loss in their old ratio. Then we'll write the amount. Okay. Now workmen's compensation reserve is shared among the partners. We can write workmen's compensation reserve debtor. How much? 5,600 was there. Okay. And out of that, some we have reserved for claim for work compensation 3000 and remaining will be shared among A and B in their order ratio to A's capital to B's capital. 1300 each. Okay, being adjustment of or excess workmen's compensation reserve shared among all the partners. That also on the same date. Then next journal entry. C has C is unable to bring the amount of goodwill in cash, so we have debited that amount into his current account. So we can write C's current account debtor to B's current account because it has to be given to B. So the amount we are writing 3000, being adjustment of goodwill that is credited to sacrificing partner B's capital. Then the last entry, what is that? C has brought in his share of capital, C's capital account debtor to, or sorry, cash account debtor to C's capital. How much? 40,000. So these are the journal entries we have to write in the journal. Okay, it's clear. Then come back to balance sheet. We are writing here, drawing the balance sheet. Balance sheet as at 1st April 2019, and column headings can be given. Then first of all, let us write cash. So what is the cash balance? How will you write the cash balance? Opening cash balance we had how much? 10,000 was there plus 40,000 he has brought. So what should be the total cash? 50,000. Okay, opening balance 10,000 was there, then 40,000 again he brought us capital. So total 50,000. That means cash balance in the new balance sheet will be opening cash balance plus if you have any cash or bank entry in the credit side of the capital accounts, that should be added. That should be added to opening balance. And if you have any cash or bank entry in the debit side of the capital accounts, that should be deducted. Then you will get the closing cash balance. Understood? So along with the opening balance, you have to plus or add all the cash or bank entries in the credit side of the capital accounts and should deduct all the cash or bank entries in the debit side of the capital account. The balance will be the closing capital, or you can prepare a cash account. What you are getting as the balance, that can be shown as the cash balance in the balance sheet. Okay, so cash 50,000 written, debtors inner column 80,000 we have written, because from debtors 80,000 we have to deduct. Now 6,000 is the provision for doubtful debts that we have to deduct here. Okay, otherwise 80,000 you can show outer column and you can show the provision for doubtful debts in the liability side. That also can be done. Now I am deducting here itself, and 74,000 will be shown outer column. Instead of this, you can write 80,000 outer column and 6,000 the liability side. Then also it is not a mistake. You can write in that way also. Then next, we are writing for stock. Stock has no change. The same amount is writing. Then comes fixed asset. That also has no change. Writing the same amount. Then C is unable to bring his share of goodwill in cash. So a current account is opened. That will have a debit balance. If current account had a credit balance, we had to write that we have to write that in the liability side. Since it has a debit balance, we have to show in the asset side. So asset side, C's current account we have written how much? 3,000 for the value of his goodwill. Okay. Now liability side. Liability side creditors. Creditors has got some decrease in value. So now it became 3,000. Sorry, creditors. Earlier how much was there? 30,000 was there. 2,000 increase was there. Then outstanding expenses that decreased. So now it became 1200. And liability on workmen's compensation, we know that we have how much workmen's compensation claim, we have rupees 3000. Remaining 2600 is shared among the partners. Then unforeseen liability, a new liability arised 2000. Okay, all the liabilities and assets over. Now the difference is, that means what we have to write here is the capital account balance of all partners. So capital accounts for A, B and C. Their capital accounts we can write 47,200, then 60,000, then 40,000 for C. So let us see the closing balance sheet. Total 1,85,000, 1,85,000. So this is the end of the problem. After seeing this, you can solve the question once again by looking into your questions, and the same type of question can be solved from your reference book. Okay, thank you.